Written communication on those deficiencies. What are some specific points here? Well, the written communication referred to in the prior slide is best made by the report release date. So you want to make it known that there were these issues and tell management and those charged with governance about these issues by the date you release the report, which is the date that the auditor grants the entity permission to use the auditor's report in connection with the financial statements, but should be made no later than 60 days after the report release date. So the best time to make this communication is preferably before you give the client ability to use your report. However, what is the law? What's required? What is the regulation here? It's that it needs to be done at least by 60 days following the report release date. Now, for some matters, early communication to management or those charged with governance may be important because of their significance and the urgency for corrective follow-up action. I'd say, it says, yes, the best time to do it is by the report release date. I mean, really, the best answer is the best time to do it is as soon as you find out about the issue. Obviously, you want to maybe follow up on the issue and see if you're correct. You don't want to say that something's an issue and then find out, oh, wait, no, it's not actually an issue. That would be a little embarrassing. So you want to make sure that you are indeed correct. And then, like I said, you definitely want to let it be known as soon as possible so that those charged with governance and management, A, they'd appreciate it because they can do something about it. But B, it makes your job easier because you want the financial statements to be reasonably assured or free of material misstatements. And by addressing this issue, this can significantly help your job. Accordingly, the auditor may decide to communicate certain matters during the audit. So just during the process, right? These matters need not be communicated in writing during the audit, but significant deficiencies and material weaknesses should ultimately be included in a written communication, even if such significant deficiencies or material weaknesses were remediated during the audit. Again, this is all reinforcing, all applying to the same rules. You don't need to make these points known during the audit. However, it would probably be best to do that. And you need to eventually at least communicate it by preferably the report release date, if not 60 days after then. What is management's role regarding these deficiencies that you discover as the auditor? Well, the existence of these significant deficiencies or material weaknesses may already be known to management and may represent a conscious decision by management or those charged with governance to accept the risk associated with the deficiencies because of costs or other considerations. As I mentioned a few times now, we want to be wary of the fact that, it's quite all right if there are issues, because guess what? Sometimes you may not be able to fix it. You don't have the budget to fix the issue. That's just going to be something that you deal with as an entity. It's not your job as the auditor to, kind of babysit them and make sure that it's fixed unless it infringes with your job to give a particular opinion. Management's responsible for making decisions concerning costs being incurred and related benefits. The auditor's responsibility to communicate deficiencies and weaknesses exists regardless of management's decisions. Again, it's just kind of like, hey, you got to communicate this. You don't have to particularly do anything about it, as we see here, but it's our job to communicate it. Just let it be known. Other points when it comes to communicating these weaknesses: nothing precludes the auditor from communicating to management and those charged with governance other matters related to an entity's internal control. In general, right, just a nice point. As an auditor, if you think anything's beneficial, you can kind of do a little consulting. Any way that you can help benefit the client through some, more efficient process or, just some other way that you would recommend of doing something to either help you as future auditor, say hey, make this change so that in the future we don't have the same issue. Or if you just think this is a great way to run your business, you're not auditing your own work. You're allowed to make recommendations. And I say consulting, but I say you're allowed to make recommendations based on points such as these, that are in the best interest of the client, right? The AICPA very much wants you to be a positive force as a CPA, as an auditor. And what better way to do that than really standing out and helping your client? Now, for example, the auditor could also communicate matters that the auditor believes to be of potential benefit to the entity, such as recommendations for any efficiency in any area or for improving internal controls. And any deficiencies that are not significant deficiencies or material weaknesses, you could assess the issue and say, okay, it's not classified as one of these issues that I actually need to assess. However, it's something that if improved, it would significantly help the company, whether it's financially or operationally or in the financial reporting realm. Now, if other matters are communicated orally, the auditor should document the communication. Just as a good general rule, just document everything. I mean, that's something we'll see In general, even business law, when we get to, our taxation exam, very much just get everything in writing, right? What are some items included in the written communication on deficiencies? Here's just a big old listing, right? This written communication regarding these significant deficiencies and weaknesses should include points. We'll go through them. It should include a statement that indicates the purpose of the auditor's consideration of internal controls was to express an opinion on the financial statements, but not to express an opinion on the effectiveness of the controls. So this is a separate piece of paper that is now talking about significant deficiencies and weaknesses about the internal controls. So this makes sense that you'd want a statement essentially just reiterating that, hey, we're not here to go through the internal controls. We're not here to do anything with that. Our job was to sift through the internal controls as they relate to the financial statements overall. We also want to include a statement that indicates the auditor is not expressing an opinion on the effectiveness of internal control. We also want to include a statement that indicates that the auditor's consideration of internal controls was not designed to identify all deficiencies that may be significant deficiencies or material weaknesses. We want to include the definition of the term material weakness and, where relevant, the definition of the term significant deficiency. I mentioned that earlier, where you want to make sure that you are explicitly saying, and those are the definitions that we had earlier on that slide where we first introduced them. These are the definitions. This is what we mean by a material weakness. This is what we mean by a significant deficiency. We want to identify the matters that are considered to be significant deficiencies and material weaknesses. That one might seem a little redundant, right? Obviously, we want to put those specific matters in there, but we got to actually state it. And we want to include a statement that indicates the communication is intended solely for the information and use of management, those charged with governance. So this is a restricted use report. We're including a statement saying this should not be distributed to the users of the financial statements. This should be kept secretive. Just it's meant for the benefit of the company. It's not meant for the financial statement users, because you are going to give an opinion separate from this. Whether there's massive significant deficiencies and weaknesses, maybe the financial statements are properly presented and there's no material statements, then that's totally fine. Or maybe the financial statements are awful, right? You're going to give them a terrible opinion, but there are no significant deficiencies or weaknesses. So this exists independently. It's just an additional responsibility you have as an auditor. If the entity is required to furnish such auditor communications to a government authority, specific reference to governmental authorities may be made. If regulatory agency or some government agency says we need to see this because we're giving them federal funding, and because this company is receiving federal funding, we have the right to see all of their significant deficiencies and weaknesses. That's a different story. Obviously, yeah, you're not gonna try to fight with the government on this. The auditor may include additional statements in the communication regarding the general inherent limitations of internal control, including the possibility of management override of controls or the specific nature and extent of the auditor's consideration of internal control during the audit. Just some additional points that you could possibly include there. Management or those charged with governance may ask the auditor to issue a communication indicating that no material weaknesses were identified during the audit of the financial statements to submit to governmental authorities. Just different points to know. You might see this as multiple choice questions. And the auditor should not issue a written communication stating that no deficiencies were identified during the audit. This could lead to confuse the financial statement users. I'd say this is the most important point on the slide, although I would definitely know all of them. That's just rules to follow, guidelines to follow, standards to follow. If you are issuing a report that no deficiencies were identified, someone might pick it up and say, okay, whoa, you're explicitly calling out there were no deficiencies. Is there maybe material weaknesses? It could just lead to some confusion, and it's kind of the mentality that less is more. Here is a possible written response from an auditor on deficiencies. We've got the actual text here, but we're going to talk about it a little bit more. Management may wish to or may be required by a regulator to prepare a written response to the auditor's communication regarding deficiencies or weaknesses. So yes, the auditor is going to communicate these to management. Management doesn't have to actually do anything about it. However, management may wish to or be required by the government or something to prepare a response to that report, that written communication that is given to them by the auditor. This management communication may include description of corrective actions taken by the entity. Now, this may just be good business practice. Maybe the company's policy is that if an auditor ever comes to them with deficiencies or weaknesses, this is just management's required to do this. And that's just a rule for the benefit of the company. Or maybe, again, because maybe they're receiving federal funding, the government is requiring them to do this process. Many reasons, not our job to understand much more than that, really. It could also include the entity's plans to implement new controls or a statement indicating that management believes the cost of correcting the deficiency or weakness would exceed the benefits to be derived from doing so. Definitely an important point to keep in mind, right? The cost benefit analysis. If such a written response is included in a document containing the auditor's written communication to management and those charged with governance, the auditor may add a paragraph to his or her written communication disclaiming an opinion on such information. So here is what we're seeing here. Now, it's kind of just like, think of it like you've got a separate file. You've got a folder, and it's got that initial communication to management and those charged with governance on any weaknesses, any issues. And then in that same file, you could have the management response to it. And then here again, the auditor could also then add a paragraph to the written communication disclaiming opinion on this information. Now, here's the example. ABC Company's written response to the significant deficiencies and weaknesses identified in our audit was not subjected to the auditing procedures applied in the audit of the financial statements. Because what's going on here is their management saying, okay, this deficiency was acknowledged, we see it, and maybe, like we said here, we are taking corrective actions, we're implementing new controls. So the auditor here is now relieving themselves of such responsibility, saying anything else that management did to deal with this issue, we didn't audit it, we're not associated with that. If there's one thing that auditors and professionals are great at, is it's disclaiming responsibility for particular items, saying, hey, we're not responsible for that, we're not going to take any liability in that sense. Hey there, are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.